Hey everyone, welcome to Inside the AI. Today we have Logan on, and I want to start off by giving him some time to give a brief summary of his background and how AI is going to integrate into finances.
Yeah, so I started investing in strategic, logic-based investing strategies when I was in high school and then got into it in college. And I got obsessed with this concept of what if there was a portion that was like machine learning, AI that was creating the strategies for me. And so that's really kind of where Surmount got started. And we initially built a genetic algorithm that kind of replicated the process of natural evolution to try to create strategies out of a large pool of data points, and from there it just kind of evolved into what it is today, to where you can basically bridge your existing portfolios with all sorts of different trading, investing, anything in between type of strategies that use all sorts of different data points. So macro, micro, descriptive, fundamental, quite literally anything that you can consider applying to financial markets can be.
Everything is going to also be linked in the description below.
Mhm.
So don't worry about taking any links down. You will have access to those links below, but let's break down by um, the name and the link of your company, and then what your services you provide.
So we're surmount.ai, and basically what we do is you can connect any of your existing brokerage accounts. So for equities, crypto, forex, whatever asset that you want to trade, and then we act as a bridge between that account and automated investing strategies that either you create or somebody else has already created.
I know you mentioned your grandfather in your bio. Let's talk through that and how that impacted your integration into finances, and then the impact that AI is having into that.
So my grandfather was, brilliant. He was a CFA, CPA, and on the side he would run his own equipment rental company. And basically, he got me into private school. And when I was in sixth grade, he thought, maybe my interest in mathematics could be applied to financial markets. And I don't know whether it was, him trying to create a mini me and, create another, future, financial advisor, or whether it was him, me being annoying on one weekend when I was helping him out with his shop and just trying to get me to, sit down and pay attention to something. But he got me started on Investopedia, paper trading when I was in the sixth grade. And that's really what started everything for me. So I knew a little bit just from kind of hearing him talk about it and watching him do his thing, but um, you know, he got me started paper trading and paper investing, and then they had all these competitions to where you had X time to produce Y amount of profit, and sometimes it would be up to 50, up to 200 different people that were kind of in the competition as well. So
Mhm.
being competitive, that's kind of where it all got started. Investopedia is a great resource to learn from as well. And so whether it was trying to learn from there, trying to learn from him, or him pointing me in the right direction of something that maybe he didn't know or didn't have the right answer to, that's kind of where everything got started. Was me just uh, you know learning from scratch from him, and trying to approach the markets. And my goal from like the sixth grade to early high school was start my own, $5,000 investment account. So I would, spray, pressure wash, power equipment on the weekends. I would work at a couple local restaurants, and my goal is to save up 5 grand. I'd put that in the markets, and I'd be on my way on the races. And I quickly realized that it's a whole different ball game when it's your own money on the line. It was no longer, paper money. So that was a really hard challenge for me to overcome. And so I just continued diving deeper into, how to build a winning strategy. And then
Mhm.
I stumbled across a Kevin Davey book, which is, I believe it was, building winning algorithmic trading systems. And I had no idea that algorithmic trading or systematic investing was a concept at the time. And by the end of, chapter one, it appealed to me as something that I could focus on the markets through more of a statistical lens as opposed to an emotional lens. And that's when everything got started. I started trying to build my own strategies, and really, was off to the races. Uh,
Yeah, that's a good point. I have a good friend who always brings in the psychology of money. Have you read that book before?
I don't think I have. I've heard of it, but I have not read it.
It's actually something that I wanted to bring up. Well, you actually mentioned some of it. It's kind of like the fears. Quick summary of it. You kind of build your habits, your spending habits, your fears of money through the habits that you're raised in.
Yeah.
So as you're brought up throughout life, if your family is poor, that may impact your decisions later in life, and you may be more risk adverse versus someone who, like that type of concept. And so I bring that topic into point because let's get back to your company and what it does, because you're integrating AI into it.
Think it's really challenging because both investing and AR and AI are things that seem so daunting to so many people, I think. And really, I think both, if you make it intuitive enough, it can be you can create a tool that can actually really help people. And I think we're trying to combine the two of them and create something to where people can approach the markets in more of a sophisticated way without necessarily needing their parents' financial advisor or their grandparents' financial advisor. Because I think a lot of times the feedback that I hear when I talk to our users or just people in the space is there's not really a solution right now to where you have control, transparency, but at the same time, that level of sophistication that a lot of people don't feel comfortable or don't feel experienced enough to set up for themselves. So I think, when I talk to a lot of people, they aren't interested in using their parents' financial advisor. They aren't interested in just signing off everything to a lot of the current robo advisors, to where it's basically KYC, know your customer, just the sign up process, and then it just throws you into a pre-built, I call them cookie cutter portfolios. Um, so what we're trying to do is provide a solution that can be really tailored to you, really tailored. Like your portfolio could be entirely different, your goals, than mine, and really making sure that you're set up to succeed without necessarily, reading 10 finance books and learning how to code and really going down that route. So that's at least what we're setting out to do. And so far, we've seen a lot of results from doing so.
That's pretty cool. And so let's talk through the challenges you've had as starting the organization. When did you start it? And some of the challenges you've had in growing it.
Yeah. Yeah, so I started this when I was in college, and I come from basically living on the PA line. I'm 10 minutes away from Amish country, Pennsylvania, so there's no tech, there's very little finance. So even me being as interested in the space as I was, it was really daunting. But found a great group of people to start working on it with, and we initially started as like an AWS for automated investing. And what I say by that, we wanted to solve a couple of the more technical points that we saw in the space, which were, you know, getting access to high quality data, making it to where you can actually use that for something meaningful, and then, deploying that some like wherever you want to use it, whether that's your Robinhood account, your 401k, wherever that is. Um, and so that's the initial problem that we were solving for, and we decided to build a simple front end around it and make it to where it was intuitive for other people to use. And that's one of the biggest problems, or I guess not necessarily problems, that's one of the biggest obstacles that we're still overcoming, is making it to where it is this sophisticated, pretty powerful product, but at the same time it feels approachable, it feels easy to use, and it really is solving the problems that people are signing up for to solve for.
Yeah, I think that's a good approach. If I've read the book Blue Ocean Strategy, and that's a pretty good book, and I think that's kind of where you're going. It's like all these other organizations, they kind of dominate, they kind of do what they're doing, and then you kind of are filling this void. And I actually am into AI very heavily, and I think it's going to replace people by not the AI, but I think people using AI will replace it. And so I think this is an evolution of that also. So this is a whole different approach that I'm thinking through.
Yeah.
And is there any type of impact on AI automation into the finance industry? Have you had any experience in that?
Yeah, I think machine learning, it tends to get a bad rap for some reason. I think everybody is just more interested in kind of the genetic space, but machine learning, when it comes to, numbers, finance, it can, do amazing things. And I think the genetic algorithm portion is a great way to interface with models. But I mean, I just saw, I think Morgan Stanley is coming out with, a transcribing tool for advisors. So I've seen a couple of tools that help advisors be more productive. But it really, I've yet to see anything that trickles down to the end user. The average people that are looking to approach the markets and find better results than they're currently getting. Um, which is basically what we're trying to solve for. I know there's a couple of other great companies in the space that are solving in different ways, and I think that's kind of the future of basically making it to where anybody can become their own professional financial advisor.
So I think what I'm hearing you say is that in your model, every person can kind of be their own financial advisor. Are they leveraging the AI to find new investments? Or what is that? Walk me through a new customer. Say I'm a new customer, logged in, and now what are they experiencing? How are they entering your platform? And then how is AI helping them?
Yeah, absolutely. So there's a couple ways. One is you can just go right out of the box and find a couple strategies that are good fit for you. If you have any idea, or you can even put in your goals, kind of risk tolerance, anything of that nature, and it will help create a custom portfolio and or custom, like a series of strategies that are a great fit for that particular use case. And then we're really building out the recommendation portion right now to where we have so many strategies that have been created on the platform, over 19,000, and trying to take it to where they can within 2 minutes, you can funnel it down into here's the best five, the best 10 that are a good fit for you, and just kind of take that optionality out a little bit and really kind of hold your hand a bit.
Yeah, and that makes sense. And just going through the website, it's very intuitive, and I think the way it's built out, it's very user friendly. So I think overall, I think it's a very powerful site so far. What are some of your future ideas of investments? Where do you think it's going to go as using AI? And whether people know it or not, I have the opinion that all these major organizations are going to integrate AI anyways. So for people to be afraid to integrate AI into their finances, it's going to be a moot point at some point. It's not going to be something you're going to be able to get around. What are your thoughts on the future of finances and either integration of AI or not?
I think we're definitely still in the early adopter phase. But what we're seeing is the people that do adopt it tend to get great results from it. Whether that's less time analyzing, or being able to find and create a custom solution or custom portfolio that's a great fit for you. Where we end up, my big goal for Surmount is to where you can automate any asset class for any time frame for any strategy type really intuitively. So in under, 2 minutes, 3 minutes, you can go in, define what your objectives are, time horizon, anything of that nature, and have something output that's actually meaningful to you. And something that is more transparent than the traditional, quarterly report every 3 months, have to, phone in to make a call, something that, is really kind of there for you at any point, markets open, markets closed, to answer any questions, to get into any asset class, and to just overall approach investing and wealth management in a way that is really tailored and really, powerful at the end of the day.
So yeah, so while you were talking, I actually was doing some research into companies and seeing how many are actually using AI. And right now, one of the reports I found, it says McKinsey and Company, they're like a surveying company, 70% of financial industry is using AI right now. So it's actually going to be inevitable.
Yeah.
Is there any type of regulations that you might be worried about moving towards the future? Because I think one of the predictions I also have is that the government is going to find a way to start over regulating some of these aspects.
Yeah, I mean, I think we're coming out of a period where maybe there's been a lack of any regulation, and now we're probably seeing a little bit of over solving for that. I think ultimately it's good to have things like financial products regulated, to ultimately defend the end consumer. At the same time, it can't be too limiting, right? Like I know one of the things that has recently gotten rolled out into the RA space is, you know, investing with AI is you have to be very careful in how you present that to the end user. So if you aren't asking the right questions or offering the right recommendations, the advisors could get in a lot of trouble. Which, if they're doing something malicious, makes complete sense. I think ultimately, I don't know. That's an interesting question in terms of where the future of regulation lies. I would say that we'll probably see things. Definitely more regulated than they are right now. But I don't see things getting to the point where you're not able to offer AI solutions for the investment space.
Yeah, I think that's pretty interesting. I had a podcast that I interviewed a gentleman named Mac, and he was a lawyer from Texas. And one of the things that he's seeing in that industry is that if you are using AI to provide any type of consultation or work for a customer, you actually have to disclose that before you are moving forward with that. So I think that would be actually a good topic to bring in for in the financial industry, because I think there's some inherent challenges with the AI that many people don't realize, like the biases in the data, where they're getting that data. There's so many different aspects, but overall, I'm all in. I think it's going to be a very useful tool. Are there any challenges that you see with the security? Like, and what I mean, not security funds, but the security of how AI is going to be integrated into finances? Like, maybe there's a financial crash because of AI or something like that.
Yeah, I mean, I think there's a couple of things that pop into my head. So one is delayed data in finance can be pretty detrimental. So I know that's one of the things that we've seen a couple of companies run into in terms of they have data up to 6 months ago or up to 3 months ago, and so much can happen within that time frame that it's really hard to make investment decisions if you're not up to speed on current data. Really real time as you can get is obviously ideal. So I think that's a challenge that needs to be overcome. And then overall, I think you raise a good point about disclosing the fact that if you're a lawyer, if you're financial advisor, leveraging AI to advise clients, make recommendations, that definitely needs to be transparent. Um, at the same time, I don't know. I believe that some of the main challenges come from the latency in the data, and overfitting is a really big problem that's hard to solve for when it comes to AI, because you can't just back test an AI strategy like you could if it was just a traditional, if then like a traditional logic based, algorithmic strategy. If you back test an AI strategy, it's basically just going to be super overfitted. So I think it's really important to balance that aspect as well and make sure that you're providing clients with transparent and accurate information at the end of the day, because otherwise it could be very misleading. And you know if you see something that says it's going to produce 1,000% or some crazy number a year, it's probably not accurate. It's probably pretty overfitted.
Yeah, it's probably one of those traps from Africa when they send you, "Hey, I'm your grandmother. Send me 100." That
Yeah.
the reverse is, "We have this great investment for you."
Yeah.
Um, so one thing I did want to move into was the you talked about the time. Is there a time in the future? Because I think AI is going to speed everything up. It's going to allow us to do a lot more faster, but it's going to allow us to be more productive. And so is there a time where the finances will be able to catch up? Because I think what you're saying is that they are regulated to provide quarterly reports.
That just seems to be the industry standard. Like if you sign up for, XYZ financial advisor, you're pretty much going to get quarterly at best, monthly reports. It tends to be a little bit out of date. I think that is a way that if you integrate your own little personal AI assistant or something of that nature, it can be real time with your portfolio. I think it's really just important that you feed whatever model that the client is going to be interfacing with as real time data as possible, because otherwise it could lock and change pretty quickly in financial markets, and it's super important to stay on top of that and make sure that uh, you're in the know of what's going on right now with both the client and just the overall market.
Let me shift the topic a little. And what's your favorite finance type of book, or your favorite book overall that you've ever read?
Yeah, I personally like The Man Who Solved the Markets about James Simons. Um, I'm huge on anything Peter Lynch. Peter Lynch is my favorite investor of all time. Um, and then My grandfather used to have a book. I'm gonna blank on the name right now, but it was basically it was basically taking 1,000 advisors and looking at their performance and how they approached client management, market management, um, and then efficiently inefficient is a great book. That's talking about basically modern day hedge funds and market makers, and that is a great book as well. So there's so many gems out there. I would say those would be my topic. And then anything by Kevin Davey. So Kevin Davey's where I got my start reading Kevin Davey. He's great about kind of entry to, pretty sophisticated level algorithmic investing. So Kevin Davey books are a great find. Um, and they tend to, even if it's your first day, trying to get into algorithmic investing, um, that seems to be probably the go-to for a lot of people.
So do you think AI is going to have a significant impact on the amount of people the finance industry is going to need to do investments?
Yeah, for sure. I think analysts and analyst advisors are likely going to be replaced to a large extent. I think advisors on the front end tend to be, I don't want to be disrespectful for everybody because I know that there are some great advisors, but they're kind of like car salesmen, right? Their job is to build and maintain great relationships and lead you into something that somebody back office has recommended or something that they're getting commission to pay for. Where I think we're leaning into an age in kind of financial management where it really can be fully personalized to you as opposed to kind of a blanket recommendation or blanket portfolio optimization or across 10, 15, 50 clients.
So in that transition, is that what Surmount provides? Is that like that gap they fill?
So that's pretty much the main thing that we try to do is provide a financial advisor in your pocket that's basically for you, right? So if you need analysis, if you need any sort of automation, any sort of personalized portfolio, so that's really where we step in and try to be you know basically a one-to-one with the client.
I do a lot of different podcasts. I do some experiments. Like last night, I did a podcast on the debate, and I do an interview with the AI, and I kind of like see what they're doing and see what it's going to predict. Tonight, I'm going to do another one where I'm going to see what it says, who won the debate, all those type of things.
Yeah.
But I bring that up to say everything that I've done with the AI has said people are going to move more towards a face-to-face versus doing the analytics and forcing that background work. And so it's saying a lot of people are going to have to develop their connections with other people. And I think that's kind of where I'm going with that is in this industry, I think the challenge is going to be bringing in the people to come to your tool to allow them to do their own investing. So I think that's going to be the big hurdle to cover before you start.
Yeah, no, I think there's definitely still a level of comfort that comes from having a human in the loop. And I agree with you that's at least for right now a huge important piece. But I think in 10, 15 years when AI is able to be a lot more precise, a lot more accurate on a consistent basis, I suspect that who you're interfacing with might not necessarily always be a human. There will probably always have the option to bring a human into the loop if something goes wrong or if you need a specific question. But I do think that the future of financial management is going to be software driven.
So is there a world in Surmount where it's going to be an all-in-one platform where you could manage your retirement there, but also do short-term planning and drive towards maximizing your cash flow?
Yeah, that's actually right now. So you can link, your retirement account. You can link your, if you have 10 different accounts for 10 different purposes, you can interface with them however you prefer to. We have long-term investing, short-term investing, or short-term trading. And, our goal is to really offer that flexibility because right now, I don't think there's any solution that has that range of flexibility in a way that's really intuitive to, bounce back to back. If you want to trade into this account, you can. If you want to, focus for tax optimization and, long-term value investing into, the second account, you can do that as well.
All right. So here's the million-dollar question.
Yeah.
Everyone's scared about the economy right now. Is it going to crash? Is what's going to happen in the future? And should people are pull out? I don't know if you were around in 2018. I was.
Yeah.
Should people pull out? Should they not? What are your thoughts? And I know we're not giving financial advice, but this is just pure
I
entertainment.
mean, this is definitely not financial advice. I actually just made a video about this a couple days ago. I personally, so not financial advice, just my opinion. I personally think that U.S. markets are probably a little bit overextended, but that's not to say that the best option is to just sit on your hands and wait for things to crash and then pick back up again. I think there's a lot of great opportunities across the world right now. If you look at different markets, India is looking really attractive. Argentina is looking attractive. China, I think, is looking pretty attractive. So I think overall, U.S. markets, if you look at like, the Shiller price to earnings ratio, if you look at just overall, uh, you know, company revenues or Apple's, I don't know. I'm not gonna get too specific, but
Hmm.
I do think that U.S. markets are likely due for a correction, and I think if we don't let markets be markets a little bit more, I think that could lead to potentially longer uh, downside.
Yeah, I think I have this. I listen to another podcast, and the guy always says the market will tell you and correct itself. Like the
Yeah,
market will tell you what's right and what's wrong. If it's not productive, it's going to either be washed away or bought up into something else because it's going to be so cheap. So the
yeah,
market will always fix what's wrong with what's going on. And I'm big into, I think, the same way. I think I'm along the same lines as you, but I think the real estate is going to be impacted very strong, and I think people are not ready for that. But that's a whole different topic. I don't know if you want to go on that tangent.
yeah. I mean, I tend to be right there with you, especially with you start to see more and more places, not only in the United States but across the world, starting to restrict Airbnbs. I mean, I'm not a real estate expert or anything of that nature. I've flipped one house in my life, so I'm definitely there's people that have made a great fortune in that. So I would lean to them to see what their thoughts were, but I tend to agree with you in that in terms of everything in the United States right now just seems pretty hot.
Yeah, I actually just saw this morning Spain was one of the countries. Did you see that one?
Yep.
And I mean, they had good reason. The statistics that they were putting out was that their cost of living to just rent, I think it went up X amount of numbers. I'll look that up right now. But
Yeah.
that's a very good reason to limit that. But it's going to put so many people, it's going to give a lot of challenges to people.
Yeah. I mean, at the end of the day, I think they're really trying to defend local communities. There are people coming in that might not even be born and raised in Spain that are coming in buying Airbnbs, trying to build cash flow properties. You know, I think it makes
Mhm.
sense when you're trying to defend the locals to just be able to afford living life.
Yeah, and these statistics I'm pulling up, it says it's gone up 40% over from between 2014 to 2018. This is just the rentals, 40%.
Yeah.
So, that's a significant number. And what they did mention was what they're going to do is they're not going to stop the Airbnb, but it's going to be prevented to uh, foreigners or tourists. So, I mean, I don't know how you even regulate that. So that's going to be a challenge in itself.
Yeah.
So let's move into cryptocurrency. This is the second large topic that is near and dear to my heart. I have a little more background in cryptocurrency. I didn't buy any when I should have, but what are your thoughts of that and how it's going to impact a lot of things?
Yeah, I mean, I tend to I'm not a crypto expert by any means. I mean, I got into Ethereum early. I was never really a Bitcoin guy until like the past 2 years. And still not a huge Bitcoin guy, but I mean, as more and more people get into it and I think we've started to see institutions funnel into crypto, which I think is interesting. It'll be exciting to see how that plays out. I think if you look at some projects, there's a lot of potential and they're really solving a use case. I think there's other projects. I mean, I saw a statistic yesterday where more coins, like more meme coins, have been created in the past quarter than I think ever before, which is insane. So I think there's also a lot of bad actors that are just trying to get in, get out, make a quick buck. Um, so I personally, I have a little bit of an unfavorable opinion that there probably should be a little bit more regulation in crypto just to make sure that, end consumers don't end up losing, you know, uh, everything. I don't know.
Yeah,
I
just like the
like
Sam
this.
Bankman-Fried.
Yeah, yeah.
Yeah,
I
that
would
was
like to
challenging.
see crypto markets um, lean back more towards utility as opposed to just looking at everything as potential moonshot, potential profit. I think there are a lot of great crypto projects that have a lot of potential.
Yeah, and I was listening to another podcast where the financial person on there was talking through the impact it's had. He was explaining, and you can correct me where I'm wrong or where you see different. He was explaining that in this time that we're in, where it's kind of getting to a point where we're unsure what's going to happen with the future of the market, people start to move more towards securities or things that are more secure. And one of those is gold. The challenge is that that's taken part of that market from gold. So gold hasn't seen an increase as much as they would have without cryptocurrency being there.
Yeah, and there's a trend that I see going on in largely in India right now of like digital gold. There's a couple companies that I've seen that's like the new asset class to look out for. I don't know. I think definitely the stable commodities, gold and silver. It's hard to go wrong there. Um, I'm I'm interested in seeing what the difference between digital gold versus just buying a gold ETF is, but other than tangential value.
Don't get me started on the what were those pictures called that they were selling?
Oh, NFTs, NFTs.
NFTs. Oh man.
They were all the rage for like 3 or 6 months, and then everything just went 80-90% down.
So what you told me with the digital gold is an NFT, which means I should get into that now so that when it explodes I can die. I'm joking about that. So, but no, because the NFT to me just didn't make any sense. Some of it
Yeah.
made sense where they were where it was like, oh, if we move to a with the Google glasses, have you seen that before? Have you? And I
No.
was like, so Mark Zuckerberg was on Joe Rogan and he was talking about you would be able to get rid of all your electronics. And what you would do is the glasses, you would buy a TV with your NFT and you would be able to hang a digital TV on the wall where your glasses are. So you would be able to position it in your glasses. So when you look through your glasses, you would see a TV there, but there's not an actual TV that's actually there.
Yeah.
And so you would do that across the board with your pictures, with anything you wanted. And so that's kind of like where I was like, oh, that makes sense for an NFT.
Yeah, that just sounds like such a dystopian world, though.
Yeah. And then I saw the money laundering going through, and I was like, that also makes sense for
Yeah,
NFT.
that makes a lot of sense. I did see like the coolest aspect that I saw, or like the use case that I saw was when people were using them as like tickets. Like you would have your own personal ticket to get to an event or something, but at the same time, it's like, what's different between that and just buying a ticket off of, whatever
Yeah, and most places were starting to
uh
give you digital
the
tickets anyway,
traditional way
so
of
it's
doing that
like it
is.
didn't make sense
So
either.
I don't know. I think I didn't really see any use cases that stuck out to me as like the next big thing or something that solved a huge problem with NFTs. But who knows? Maybe in a couple of years we'll see somebody change the world with them.
And so let's move back to your company.
Yeah.
Let's talk through some of the impacts it's going to have. So do you think that someone coming out of college, I'm still in college right now.
Nice.
But I've gone to college for years. I don't know when you graduated, but do you think people should be specifically focused in finance, or should they have an understanding of finance and more focus into AI that could drive that? What are your thoughts about that?
I tend to agree with the sentiment that, and this is completely hypocritical, but too many smart people go into tech and finance, and I think we're seeing other industries actually lose their long-term ability to compete just because all the money is going into tech and finance. So that's where everybody wants to be. So it makes sense when you're chasing the money. I would say if you look at companies like Renaissance Technologies or companies that have really changed the world, they don't hire anybody that just has a strict financial background or financial degree. They're great things to learn. Physics, engineering. There's so many things that I feel like aren't getting enough uh, brain power currently, and you see other countries start to kind of pull ahead on some things that are not just important to the digital age and making money online, but also important to society as a whole.
Yeah, I asked that because I wanted to see what you think of the future of your organization in the sense of if I were coming out, would you rather me have a finance degree? Would you rather me have a AI degree, a mixture, or a whole different degree, which you just mentioned? And what would make me the most marketable to land a career at your organization?
Yeah, so I mean, definitely software engineering. I see statements all the time that software engineers are going to get replaced. I tend to disagree with that statement. I think that maybe in 10 years, AI can be good enough to where it can create an app, but at the same time, if you aren't technical, you and need to make a change, need to make an optimization, a bug fix, anything of that nature, engineers are always useful. And then overall, there's people that, if you look at great art, if you look at great technology, it tends to get inspiration from nature, from engineering, from things that might not necessarily just come from getting a degree in computer science or finance and financial management. At the same time, it really depends on the individual, right? I think mathematics, hard sciences, there's a lot of great skills that people can develop in college that can then be applied to whatever career path that they might want to pursue at the end of the day.
Yeah, and I agree. I think colleges are going to be on the downward trend because like the internet and how much information is out there. I have this idea where in the past the colleges were the gatekeepers to knowledge, so you had to go to college, and now it's like the professors may have needed a second income because they weren't making enough, so they started a YouTube channel and started putting out that information, and now they're kind of not a gatekeeper anymore.
Yeah. No,
And
places
so, go ahead.
I was gonna say places like Udemy, Coursera, all like the online education. Like there's like you said, there's so much. I think the problem is um the information overload almost. It's almost at sometimes hard to determine the path to take in terms of going from novice to expert in a field. But I definitely agree that there's way more information online, and you can learn a lot more online than a 4-year degree. I think
Mhm.
college is where you can build soft skills, though. I think, interaction with others, building relationships, networking, understanding, how to, you know, uh, you know, balance task management. I think that's where a lot of people don't talk about all the soft skills that college teaches you. At the same time, I definitely agree in terms of, in this day and age, you can just learn anything online.
Yeah, and so I think this will be leading into the ending of the podcast, but let's ask one more question. And this is for a younger crowd. If someone was, say, they're 18 years old, they're working at their first job, we could say it's at a fast food restaurant or any type of job that's kind of entry level job. They're not making as much as they would want in the future, but they're just getting by. Do you think it's a great idea to invest in their 401k, save money? What would you recommend to somebody like that? Not knowing this isn't
I think thinking about the future, you can never go wrong. Thinking about the future, and saving, investing for you in 10 years and 20 years. The people that don't do that end up regretting that they didn't do that. At the same time, it's equally important um, to make sure that if you have all of your eggs in long-term investments and don't really have access to any short-term liquidity, that can be limiting too. So I think there's definitely a balance. um, the path that I took personally was investing as much in a 10-year 20-year time frame for the future as I could, and that has we've been in a great bull run the past 10, 15, 20 years. So ultimately that ended up working out. But there was definitely some times where I felt the liquidity crunch and wasn't able to pursue a couple of things just because I didn't have access to liquidity. But I would say for anybody that's just starting out, there's so many ways these days that you can earn money online. The creator economy is absolutely booming right now, and You can really become an expert in anything as long as you're providing people, with reliable, consistent value. You can monetize that these days. So I would say my opinion is definitely think about the future, but at the same time, make sure that in the short term, you're trying to maximize, income. You're trying to maximize, skill sets, and you don't miss out on living life and enjoying life because you're only young once. I know a couple of people that were saving their entire life, and then now they're 75. They can't travel because they're either sick or have ailments or whatever it is, and um, it's really important to kind of balance that long term and short term aspect. So I don't have a perfect answer on that, but that would be my opinion.
Yeah, I'll give you my what I've been doing, and I don't know, it's not any financial advice again, as I'm not even a financial expert or anything, but I put 12% since I think I was 22 years old into a retirement.
Yeah.
And the reason I did that was because I was working at a small auto parts shop where you sell auto parts, and the older gentleman told me, he just gave me some advice and said, you need to do this. So I just did and listened to him. And my whole life I've been doing that. Then I take another 12% and do that for 5-year investments. And I just let that grow. And I don't even think of that as anything. And then, the rest is my budget for my life. And then any extra money I have, I call it gambling, like short term.
Yeah.
And so then I scratch that itch in that way. So that's my little strategy. I don't know if it's actually good, but it's useful for me.
Yeah. Yeah, I mean, it sounds like it's balancing both long term, short term, and in your case, the 5 year, the medium term, which is an aspect I didn't even talk about. So I think that's a winning solution. And ultimately, it depends on each person. My approach could be entirely different than your approach, and we could end up both getting to a place in 20 years that we're super happy. So I think at the end of the day, just create something that really works for you.
Yeah, that's also to the I want to see your idea real quick about this. Do you know anything about Dave Ramsey's strategy?
I've heard so much about Dave Ramsey. I haven't really explored his content all that much, but I know he seems like one of the more logical, trustworthy people in the space from what I have seen.
Yeah. And so there's this, a lot of the research I was doing, there's this push and pull because his idea is get out of debt, use that debt to grow. And then there's this other idea where get into debt and then use that debt. And I'm just like, which one are you supposed to use? So that's challenging.
I think it depends on what asset class, really, because like if I'm in stocks and just trying to take on as much leverage as I possibly can, that's a pretty risky situation. Like I'm really betting on myself, and if markets correct and I'm on the hook for a margin call that I can't afford, like that can be really detrimental. Um, I think people that play the debt game and play it well, in my opinion, tend to be on the real estate side of the world. And I mean, it can work out. So I would say it really depends on what asset class you're looking at. Public equities, Forex, crypto, that's probably a place where you want to limit the amount of debt that you take on. Whereas something that's a more stable asset class that can, uh, produce returns. And real estate just has its own tax advantages as well that I don't think I think we're about to wrap up, so I don't think we even have the time to get into the tax breaks. But um, that's a huge consideration as well, is what type of tax optimizations can you consider for that debt. So I tend to be in leaning towards the space of trying to minimize debt, but at the same time, if I was going to try to build a multi-million dollar real estate portfolio over the next 3 to 5 years, I mean that's a way that you do it.
Yeah, and I was going to say that I was like, oh, that makes sense. You're mentioning the real estate market. That's kind of where it happens more, and it's probably because they can deduct most of what they're doing, and then they minimize that. So that does make a lot of sense. Yeah, so let's save some time for you. So go ahead and shout out your organization, your company one more time, and any future projects you're working on, any projects your company's working on, and some of the things you're doing.
Yeah, absolutely. So we're Surmount AI. And again, we basically make it really easy to automate any asset class for any of your existing brokerage accounts. And then We have a couple of cool projects that just within the company that we're working on. We spun something up a couple of months ago, analyzed. So we're basically trying to put a financial advisor, in your pocket to where you can actually interface with, because up to this point it's been very much kind of self-serve, but putting it to the point where you can go in and really get personalized feedback, personalized analysis, um, tailored to you specifically. So we're excited to be playing in the wealth tech space, and so far we're trying to provide as much value as possible, and we're excited to see what everybody's feedback is, and how we can continue doing that.
Yeah, no, great. So again, I mentioned the links will be in the description below, so feel free to check that out. Support them, and go check out Surmount. I appreciate your time. Thank you guys for listening.
Awesome.